No economical stimulus? No stimulus check? Who needs it? I need it. The economy is still moving. My goal here is not to trigger anybody and understand life as we knew it has changed and there's still lots of people suffering. This report is based on the latest news and data coming out this morning. Everything is not perfect. Comparing this month and this year to same date last year, the economy is still down. But last year everything was booming, so comparing to last year is comparing to a high bar. But the overall economy is better this month than the previous month. All economic areas are not moving evenly and continuously, but they're moving with pushbacks and in a volatile way. In April and May, companies like Amazon, Zoom, and Peloton and many others made money like never before. All the companies that were built for social distancing are thriving. These companies were doing well and will keep on doing well because they allow us to have a more normal life similar to the life we had before the virus. A more normal life like the life before the virus, but still social distancing and not spreading disease. At the same time, the housing market is still doing well, especially single-family homes that are not in major cities agglomerations, but maybe just a 5 to 15 minutes ride. That housing market never went down and actually went up. Also, everything home-related are booming. Many people are making renovations in their houses because the same place they live is also the place they work and they play. Home Depot and Lowe's are selling. If you need wood or granite for construction, do not expect good prices. Actually, if you need granite for your kitchen right now, you're gonna have to wait for the next shipment. On the same hand, pet stores are pocketing. Everyone has got a furry companion to spend their quarantines. Now they need to buy litter box, pet food and everything. And the people that already had a pet said, oh, I need a companion for my pet, so they went and got a new pet. If you have interest in finance, making money, saving and investing, please drop a like. I've heard it's a great way to boost the economy. And if it's your first time here, subscribe and hit the bell so you get my next video. Once restrictions started easing around the world, the technology companies boom lost momentum. And the other sectors and regular players came back into play. But the virus never went away and this bug is not leaving. So what happened? September came along and the virus cases started skyrocketing again. Europe right now is once again implementing restrictions. This new spike is not like the spike we saw in March, but is a reminder for us to keep the masks on and be responsible. With all this push and pull, the stock market is not moving continuously. Every day some new news happen and now I think, oh, my stocks now will tank and disappear. But no, a new sector picks up. More virus cases equals more use of the technology sector and the technology stocks go up. Once the virus cases start going down and a vaccine talks start improving, those technology stocks that were up start going down. And the other sectors start picking up like traveling, hotels and restaurants. On March, everything came down, but from then to now, it's a pull back and forth. More virus, more social distance equals technology sector picking up. And on the same hand, once we have less disease, those tech stocks start going down and everything else starts picking up. While I go over what I found this morning, write on the comment section down below your thoughts, if you agree or even if you don't agree. This is what I found on Yahoo Finance. No stimulus? No problem for US consumers so far. Morning brief. The US consumer continues to impress. Last week, the Morning Brief wrote that September appears set to be a slower month for the US economy. A temporary bump from Labor Day spending, a slowdown in the labor market, a lack of fresh stimulus, and a rough patch in financial markets were all viewed as negatives by Wall Street economists when assessing the overall state of the US economy. 5 months into this recovery, but a closer look at the health of consumer balance sheets and spending habits tells a more positive story, particularly as we wrap up a second month without additional stimulus, while little progress is being made on helping workers get through this downturn. Extracting a signal from high-frequency economic data has been challenging in the last few weeks, as many indicators strengthen around the Labor Day holiday only to weaken shortly afterwards, said Jesse Edgerton, an economist at JP Morgan. As the dust from these possible seasonal distortions clears, however, our Chase card spending tracker appears to be on track for a solid monthly increase. Edgerton notes, according to the bank's 30 million cards, spending in September looks set to fall 5.8% from last year, a market improvement from August's 10% decline from a year earlier and the best year-over-year comparison we've seen for any month since February. There continues to be little sign of a cliff in cards spending after the expiration of the extra $600 per week in unemployment insurance benefits at the end of July, Edgerton adds. And work on consumer balance sheets from the team over at Morgan Stanley might help explain why. Economists at Morgan Stanley, led by Alan Zentner, flagged the resilience of consumers in a note published Monday, noting that increased savings built up from the CARES Act offers consumers a sizable buffer as we head into the fourth quarter and early 2021. Household spending has indeed been resilient, not only supported by a faster than expected return for jobs, but a buildup of savings supported by earlier fiscal support, Morgan Stanley writes. How much consumers choose to draw down savings is important when thinking about income smoothing in the face of fading fiscal support. We estimate from April through July, the U.S. consumer built up a cumulative $12.5 trillion annualized in excess savings. The firm adds that while most of these savings do sit with higher income and higher net worth households, savings have accrued to lower income households as well. In its note, Morgan Stanley cites a paper authored by Natalie Cox, Peter Koenig, Pascal Noll, etc., presented at Brookings Institution Conference earlier this year, which found that the increase in the savings rate was driven by the lowest quartile of earners, and with lower earners increasing their spending fastest. As the economy reopened during the summer, a deeper savings buffer for this cohort of consumers could bolster economic growth. Recall that consumer spending accounts for just under 70% of GDP growth. Quarters are actually driving more of the aggregate increase in balances than would be expected from their initial balance shares. So liquid wealth inequality decreases between February and May, the authors wrote. This provides a concrete sense in which the poor are disproportionately increasing savings relatively to the rich during this pandemic. While this shift in the wealth distribution towards low-income households may not seem huge, it implies an almost 2 percentage point decline in the share of liquid wealth held by the richest quarter occurring over a matter of weeks. And so it is the buffer provided to the lowest earners through the CARES Act that it seems the economy is now working through. And this dynamic suggests, at least so far, that the economy should be able to continue its recovery even in the absence of additional fiscal stimulus. The willingness of consumers to draw upon these savings in the coming month is yet to be known, Morgan Stanley writes, but we believe it will provide an important stopgap to the loss of government transfers. So they provide us with this clip.
Barry, we've seen a little bit of the shift, and Ness was talking about it just in terms of the leadership, I guess outside of today though, but in the month of December, we've seen investors favor some of the cyclical names, some of the value plays. Where are you seeing opportunity in this market when the leadership seems to change by the day?
Well, you're right. It's like the Wizard of Oz, follow the yellow brick road. What had been working is what people are continuing to buy. So those big FANG stocks and the like have certainly been an area that draws interest. As I look at it, I would see that there are opportunities in other areas beyond that, and that's something that we find in the technology area, like a Cadence Design, which is the precursor to the semiconductors. They do all the design work and software and the like. And they're seeing huge jumps in their top and bottom line in their earnings. They've just got a lot of cash on hand. And so they're beneficiaries of this time that we have with the COVID. Some of the others that we see that we like are like Home Depot. I know it's not a surprising name to folks, but definitely have taken on the internet with gusto, about twice the sales on the internet over Lowe's. And the costs have gone up a bit, but they're making it up with sales. I'm in there and I see lots of people in my local Home Depot. And then lastly would be something that is probably very timely is Generac, which makes generators. As I look at that particular company, we've got almost a record number of hurricanes this year. We have grid problems, of course, in places like California right now. So the residential side is a high margin for them, and they're making great sales at the moment. So again, these aren't the top tier. I don't see anything wrong with those, but there are some opportunities down below that, and maybe they'll be growing opportunities as we go forward.
Hey Barry, you mentioned Home Depot's on your page, Generac. I guess you can tie both of those in with what we've been seeing in housing. Once again today, we got that existing home sales number better than expected. Homes continuing to be bought at just record speeds. Do you think the housing market is going to be able to offset some of the weakness that we are seeing in the services area? I mean, how long can that trend continue?
Yeah, it's very important that we get the consumer going again. They're a little reticent, obviously, for many reasons, both with COVID and, jobs primarily is the thing that folks are concerned about with, still about half of the people out of the work. So as we look at the situation with housing, it's just amazing with these low interest rates driving people. You can get less than 3% in some places for a loan. And so it's driving a lot of folks to buying houses and the like. So I went by a local, project here. They haven't even put any houses up. It's just, the roads and at the...
Same thing by my area. Last week they leave, the week later it's already taken. It goes for sale today, the next day it's sold.
Front sign that advertises it said sold out. So that tends to tell you that, yep, it's going pretty fast right now.
Hey, Barry, Rick Newman here. I think you should introduce everybody to your dog in the background there. But after that, could you tell us how big a deal is it for markets if there is no further stimulus bill this year or period?
Yes, I think the market had been building a case that it was going to happen, and that's Champ in the background, by the way. He comes with me to work, and I consult him on the difficult issues. But as we look at the stimulus, I think the last week or so, the fall off we've had in the market is a direct, correlation to that, taking a little bit of the confidence out of investors. I think as we start to see, the economy picking up a bit and certainly earnings picking up once again, that can replace it. And of course, the biggest thing, even more than a stimulus bill, is the Fed. And they say rates are low and money's available. I call it quantitative easing to infinity and beyond, because they don't look to take their foot off the pedal at all. And that takes away the interest in any other kind of investment than really stocks. So there's a huge support there, even though risks from a historical basis are pretty high in the stock market right now.
To summarize, it's crazy to be watching the guy talking about people working from home when he himself works from home, and as I was saying earlier regarding the pets, his own pet is in the background and he says I consult with him for the hardest questions. Alright guys, I'll be wrapping this up here. Thank you so much for watching this video. I wish you 1000 blessings and lots of health.